Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the flat scenario where we are looking for a three-wave corrective structure to the downside for lower prices to come. In this scenario, the most common target area for your wave B is between the 1.236 and the 1.38 taken from the high to the low of wave A. After a wave B, we're looking for an impulsive structure to the downside in a wave C. Now in this wave B target area, we have some additional resistance, which is the blue box here between 43.9k and 44.7k. However, we really want to see proof of resistance and weakness over here, whatever that is for you. That can be volume dying down and increasing on the way to the downside, a market structure change, bearish CVD divergences, RSI, MACD, MFI. It doesn't really matter, but the reason that we want to see some solid proof of resistance and weakness is because this target area is also in the middle of a daily gap. On the daily time frame, we had a daily candle closing here, then a day with a big move to the downside, and the next daily candle closed over here, leaving a gap on the chart, an inefficiency. Now we tested this gap once, found a rejection to the downside, and we have now for a couple of days already been testing this gap. The moment price is closing candles in this gap, it does increase the probabilities to fill the gap and move to the upside at 45.5k, where we also have the golden pocket taken from the high to the low. So if we do not see any weakness when price is reaching this area, we are simply gonna look for higher prices, where also just above the gap and the golden pocket we have another blue resistance box here sitting between 45.9k and 46.7k. Locally inside this wave B, we are then looking for a three-wave structure. So in this wave B, most commonly, we are looking for a zigzag in a wave A, B, C. That is what you see most commonly in a wave B. If I then open this scenario, this is what we are looking for. Finish wave A, finish wave B, and we're looking for a wave C to the upside. However, what you can also see is that this wave 1 is finished, wave 2 as well, but wave 2 retraced to the 0.886 Fibonacci. The 886 is a rare target for a wave 2, pulled from the low to the high of wave 1, lowering the probabilities that this is a wave 2 over here, increasing the probabilities that this is a corrective low. Another thing is that if this is the low of your wave B and you are moving to the upside in a wave 1, 2 and we expect a wave 3 to the upside, that the common target area for your wave C is over here. But your minimum target usually for wave 3 is far higher, so the probabilities of ending an impulsive structure in a wave C in the target area for a wave C are very, very low. If we look at another scenario in this range, which arguably is more bullish, as here we are looking for a finished wave A, WXY and a B before then continuation to the upside in a wave C to higher prices, we are looking here for a three-wave structure in a wave W, three-wave ABC structure in a wave X, and then a wave Y to the downside, or potentially wave Y turning into a triangle here. Now this wave W can both be counted as a potential zigzag in a 535 or even a flat, because price retraced to the 0.9 Fibonacci taken from the high to the low that we have over here. Now this does give us a few options for wave Y. Wave Y can be a zigzag structure to the downside, a flat structure, or a triangle. Now with the high of wave X over here after then a zigzag in an ABC, has to be said wave C is relatively short but hit at least the minimum target for a wave C, which is the 0.618 taken from the low to the high to the low over here. We are looking for a wave Y to the downside, which as you can see here has a three-wave structure and potentially a finished ABC, which means we could have a flat X and then a zigzag to the downside, finishing wave Y on top of the 0.618 as you can see, taken from the high to the low of W to the high of wave X, which is a common target area for a wave Y. Alternatively, this three-wave structure is the beginning of a bigger sideways corrective structure in a triangle, after which we expect continuation to the upside. Of course, as mentioned, wave Y can also be a flat structure, but that would mean we are going to take the highs anyway and then see a rejection, which is very, very similar to what I explained in the beginning with the bigger flat structure. If we look at this move towards the upside, there is the potential for this to be a zigzag structure over here, as we are in a wave C target area, so make sure you observe the reaction over here and look for some proof of resistance or support. But where price is at the moment, there is not too much resistance except for this simple support resistance area over here, the white box sitting between 43.2k and 43.3k. Now this is a very interesting volume profile, and as you can see, the value area high very nicely respected, value area low acting as support a few times, but also at the low of this range we have a support area between 42.2k and 42.4k, and we have above price one more resistance area here, 43.4k to 43.6k. If we look at the CVD divergences, then we have these bullish CVD divergences here, higher low in price, lower low on the CVD, did not yet play out as price has to take this high. That is the target. So either the target is hit and the bullish CVD plays out, or price has to move to the downside and move below this double bottom over here. Also today we had bullish CVD divergences over here, higher low in price, lower low on the CVD. This one already played out as price took this high, so this one can now be removed from the chart. And if we then look at the probabilities of the different scenarios, then on the micro in this range over here, the probabilities from an Elliott Wave point of view are at the moment higher to take these highs over here before at a later stage potentially taking the lows. Now a couple of extra information that I wrote in the probabilities, which is good to know. If we are looking for price to move to the downside, there's a few scenarios I did not talk about, right? You have a potential flat in an A, B, C, but in this case at the moment this range over here did not retrace high enough for a potential wave B and then already an impulse to the downside. If we look for a double zigzag, meaning an ABC down, retracement in X and then another ABC down, X retraced too high as it hit the 0.7 Fibonacci taken from the high to the low over here, which really lowers the probabilities for a double zigzag and a sharp correction to the downside. And if we then look at a WXY with a flat in wave Y, we're looking for a WX and then this as a flat in wave Y, where we're looking for an impulsive structure to the downside. But because of the three wavy nature of this move down over here, the only option you really have is a diagonal in a 1, 2, 3, 4, 5. However, a contracting diagonal is by far most common, meaning that wave 3 is shorter than wave 1. Of course, wave 3 does have to take the low of wave 1, but you will see that because price retraced so high at the moment, the 1-to-1, which is a maximum target usually for wave 3 in a diagonal, is so close below the low over here that it lowers the probabilities for a sharper wave C to the downside in a diagonal. More locally over here, the probabilities are higher to have a little bit of a range, a little bit of a retracement over here, what we have at the moment, but also looking for the highs before the lows. Wave 2 over here hit the 886 as shown for a potential 1, 2 and a 3 to the upside, so it does lower the probabilities a bit that this is a wave 2 low over here. And if it does take the highs, right, it can easily go past the wave C target box to higher prices. Wave Y being a triangle is too early to call, as usually I only like to look for triangles when a wave D is in, but that is clearly not the case just yet. And we have potentially a wave Y already finished over here at the low, where now we are looking for a move to the upside in either a wave 1, 2, potentially another 1, 2 for continuation, that would be very bullish of course, or potentially a 1, 2, 3, 4 and a wave 5. If we are, however, looking for a wave 4, we do not want price to hit the 0.618 that you see on the chart over here at 42.9k, as that would be an invalidation for a wave 4. So generally what we are looking for is price to take the highs before the lows, either continue towards the upside where we observe the reaction at higher levels at resistance, or continue the range, after which we then expect a continuation to the upside, as at the moment that is the highest probability from an Elliott Wave perspective. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.